While some CEOs play it safe, Michael Saylor, he bet the future of his entire company on Bitcoin. Now, you might be asking, was it worth it? Well, that's what we're going to find out today. Welcome back, everybody, to our channel where we bring you the best crypto content on YouTube. If you have UNT already, smash that like button and ring the bell, so you do UNT miss any of our upcoming videos. Today, we look at how Michael Saylor went from being a skeptical businessman to one of Bitcoin's loudest voices. This is the story of how Michael Saylor turned his company MicroStrategy from an ordinary business intelligence firm to a Bitcoin powerhouse. In the early days, Saylor had no connection to Bitcoin. He was simply a regular businessman who wanted to expand his software company. After studying the history of money and currencies, he recognized that global economic cycles were dominated by two trends. One is the constant struggle between nation-states to expand their empires and influence. The second trend is the desire for individuals to preserve and grow their wealth. And in this environment, he believed that cash was a terrible way to protect his company's wealth. So before Bitcoin, there was MicroStrategy. In the late 1980s, Michael Saylor co-founded the company MicroStrategy with his friend Sanjay Mujal, originally named Prograph. They specialized in programming languages, but soon after, they rebranded to MicroStrategy, after launching a product that enabled small businesses to manage their data. Over time, they refined their services, specializing in business intelligence and analytics software. And by 2020, MicroStrategy was a multi-billion-dollar enterprise boasting hundreds of employees worldwide. However, in spite of its success, the company had hit a ceiling. By 2020, the economy was experiencing record low interest rates and quantitative easing. At the same time, Bitcoin was trading near all-time highs. So instead of focusing on business expansion, Saylor was pondering, what's the best way to keep my company's cash in the face of inflation? He started diving deep into economics and the history of money. And in the process, he uncovered why Bitcoin was different. As he researched, he learned that throughout history, assets like land, gold, and commodities have preserved wealth better than anything else. He also learned that the US dollar, which was pegged to gold at its launch, lost over 99% of its value since then. To further his studies, he read the Bitcoin white paper, and he spoke with many experts, including Hal Finney, one of the earliest members of the cypherpunk community, and the person to whom Satoshi Nakamoto first sent Bitcoins. He even reached out to Andreas Antonopoulos, a renowned Bitcoin advocate. These conversations and research led Saylor to conclude that Bitcoin was the optimal way to preserve his company's wealth. But it wasn't until he heard from Don Valentine, a pioneer in venture capital who had invested in Apple, Google, and eBay, that he became convinced. Valentine shared his experience of investing early in tech companies. He said, "When I saw what was going on with the internet, I knew it was going to change the world. So I put all my eggs in that basket, and I think that's what you should do." Hearing this perspective, Saylor experienced a shift in thinking. He realized he needed to make a bold move if he wanted to secure MicroStrategy's future. And that's when he decided to go all in on Bitcoin. It began in August 2020 when MicroStrategy announced the purchase of $214 million worth of Bitcoin. At the time, each Bitcoin cost roughly $11,000, and they bought around 20% of their treasury in Bitcoin. The news sent ripples through the business world. People were wondering, is this the beginning of institutional Bitcoin adoption? And while critics questioned Saylor's strategy, he held firm. Instead of resting on his laurels, Saylor continued to educate himself and MicroStrategy's shareholders about Bitcoin. He spoke at conferences, he gave interviews, he even appeared on podcasts. And in each appearance, he emphasized the importance of Bitcoin as a long-term investment. It's hard to imagine now, but back in those days, Bitcoin wasn't exactly mainstream. Many people still considered it a risky speculative investment, but Saylor didn't see it as a gamble. He saw it as a once-in-a-lifetime opportunity. He said, if you want to predict the future, you need to study the past. After looking at the history of gold, commodities, and currencies, he was convinced that Bitcoin was the best way to preserve wealth. But while he was talking about these things, he wasn't standing still. He was taking action. Following the first purchase, he took the company's cash reserves and kept buying Bitcoin. MicroStrategy kept adding to their holdings, even as the price fluctuated. And this strategy wasn't without its challenges. There were times when Bitcoin's price dropped significantly, and MicroStrategy's Bitcoin holdings decreased in value. However, rather than being deterred, Saylor saw these drops as opportunities to buy more Bitcoin. He understood that in the long run, Bitcoin's price would likely increase, and he was right. Today, MicroStrategy holds over 150,000 Bitcoins worth billions of dollars. This makes them the company with the largest publicly disclosed cryptocurrency asset holdings in the world. Other companies followed suit. Tesla, Square, PayPal, they all started buying Bitcoin too, and this created a ripple effect, pushing more and more people to invest in Bitcoin. Looking back, it's clear that Saylor's decision was a resounding success. Not only did he protect his company's wealth, but he also positioned MicroStrategy at the forefront of the Bitcoin revolution. Of course, not everyone agreed with his approach. Critics pointed to the volatility of Bitcoin's price and argued that Saylor was risking his company's future. But Saylor didn't waver. He continued to buy Bitcoin and educate people about its benefits. He even earned the nickname BitBoy from the crypto community. But while Saylor was busy positioning MicroStrategy to take advantage of the Bitcoin boom, he was also busy sharing his knowledge with the world. He became a sort of evangelist for Bitcoin, spreading the word about its potential to disrupt traditional finance. He spoke at conferences, he gave interviews, he even had a podcast. And through all of these channels, he shared his insights on why Bitcoin is the best way to preserve wealth. When asked about his views on Bitcoin, he said, "The best definition of Bitcoin I've seen is that it's a protocol secured by cryptography that allows a new form of money to come into existence. A new form of money that is scarce, sound, durable, portable, divisible, fungible, and it has a growing supply." He also compared Bitcoin to gold, saying, "Gold is heavy, and it's difficult to transport. You can't hold it in your hand. Bitcoin, on the other hand, is digital. You can hold it in your hand, in your mind, it's easily transportable. It's instantly divisible, it's fungible, it's durable, it's rare, it has scarcity, it has utility." He was also quick to point out the benefits of Bitcoin over traditional currencies. He said fiat currencies are controlled by governments, they're issued by central banks, they're managed by politicians, they're subject to manipulation. Bitcoin is controlled by nobody, it's governed by math, it's open source. Anyone can audit the system. But perhaps his most famous quote is this: "I never sold an ounce of gold to buy Bitcoin. I never sold a share of Google to buy Bitcoin. I bought Bitcoin because I sold a bunch of other stuff." And this sums up Saylor's approach to Bitcoin perfectly. He didn't jump into Bitcoin because he was a fanboy. He jumped in because he had studied the history of money and he believed Bitcoin was the best way to preserve wealth. Today, Bitcoin is a major part of the global financial system, and it's clear that Michael Saylor played a key role in this. His decision to buy Bitcoin wasn't just good for MicroStrategy, it was good for the entire crypto industry. It showed that big companies could adopt Bitcoin and help push the technology mainstream. So what can we learn from Saylor's story? First, he was willing to think long-term. He wasn't focused on short-term fluctuations in Bitcoin's price. Instead, he looked at the long-term trajectory of the market and made a decision based on that. Second, he was decisive. When he was convinced that Bitcoin was right for MicroStrategy, he didn't hesitate to make a move. Finally, he turned risk into a strategy. Instead of seeing Bitcoin as a risky investment, he saw it as an opportunity to protect his company's wealth. In conclusion, Michael Saylor's legacy goes beyond his success in business. He showed the world that Bitcoin is more than just a gamble. It's a serious investment that can be part of a sound financial strategy. He showed that with careful research and planning, businesses can take risks and still succeed. And most importantly, he showed that Bitcoin is here to stay.